Hey folks, want to do a sound check? Can you give me a feedback here? Good afternoon, good morning, wherever you are. I just want to give everybody a heads up. I always do a nice clean reboot. So when I'm doing the show, I can have a nice clean instance. I rebooted and TradeStation is not coming back up for me. So what I'm thinking about doing here is I think I'm going to have to reboot and turn off some virus protection and stuff like that. So it'll probably take me a few minutes. I don't know that there's a way to keep this live stream going. Yeah, this is somewhat of a disaster. It's given me an error. It won't load back. It tried to apply a new instance of TradeStation and it is just locked up. And I don't want to go calling those guys, but I obviously need the platform running for a lot of reasons. Yeah, Paulo speaking, exactly. I'm trying some other stuff here, so I'll be a little bit distracted for a few minutes. As, yeah, folks, we've got quite a few people on here. I think I'm going to have to reboot because of this TradeStation situation. Hopefully I get that up and running very quickly here. So if you're hearing this, I think I can put something on a channel. I'm just going to put on here maybe a 15-minute delay. I really apologize. I'm bringing everything up, and I've been struggling with this thing for about 15 minutes. Yeah, here we go, guys. I'm going to take it down. Hopefully, we'll be back up here very quickly. Thanks a lot. Yeah, I'm going to do one thing. I see Kelvin. Uh, yeah, under 3-2 long. Let's see here. You're saying there's all the buys and everything's right there. I'm not sure what you're talking about. So, way you get to that real quick, I've got WaveTech up, and and on that home page, you got to go to the home page, and you should bring up the 3-2 long. There's 86 new buys, 39 sells, 94 and 50 on 1.2. So you go here and you just click on daily 1-2, and that will kick it off. And then you'll have all, and then you can sort by market positions when you get there. So the symbol MP is symbol market position. All right, folks, I'm gonna go for this thing one more time. Okay, thanks a lot. I'm gonna reboot. I'll be back as fast as possible. Thanks a lot. Okay, everyone. I could not get the other stream to work, so hopefully we'll get everybody over. There were quite a few people. We're letting them know. So I've got everything running. So that's the good news. If you knew, I had to reboot. TradeStation wasn't coming up right. Got it all figured out. We're up and running. Hang on one second, please. So we're getting a little late start today, and very, very disappointing that this thing didn't come up like it was supposed to. We had several hundred people on, so right now we don't have a lot of folks over. So I just want to wait a few minutes. Let me know who's there, just so we can start to get things going here. Hey, folks, I'm just checking in, see if you have if you can hear me. We had a problem with the other stream, had to restart. So we're trying to get folks over. There were quite a few people on the stream. Had an issue with TradeStation, had to reboot, couldn't get the other stream to come back up for one reason or another. So let me know you're there, you can hear me. Hello, testing. Okay, hopefully you guys can hear me now. Let me know how that sounds. Yeah, I know the old stream, it wouldn't let me back in when I tried to restart OBS. It wouldn't let me take that stream back on. I don't know why it did that. And you guys are hearing me all right, okay? Right? Interesting. So the other stream is still running. Uh, Interesting. So is anyone, this is terrible. It's possible we have two streams running. So the folks that are joining in on this stream, you're hearing it okay, right? I'm really sorry about this. Hello? How do I get on? How do I get on? How do I get on the other one? Okay. Okay. All right. So, okay, guys that are now that we told everybody this is a cluster, guys. I am so sorry. I'm told now. I just had a call come in that the other stream is still running. So if you're on that stream, stay where it is. If you're on this one, it looks like they're both running. I'm just gonna do them both. I have no idea what's gonna come out of this. I think there's 400 people on the other stream. So we'll see how. I'm just gonna leave everything running. So just to double check, so we don't get totally messed up here. People that are coming on new stream, you're hearing me, right? Jay, you're on there. Hey, Jay, just let it go. Okay. All right. Let's just do this thing, man. Sorry about all the confusion. What a terrible thing. I'm pissed at TradeStation right now. I had to turn off all kinds of stuff to get it going. So let's go ahead and get going. Let's talk about it's been. I'll get into the flow here in just a minute. No, so last night's video was So last night's video, I talked about a reversal, and if you watched the video, you know I was talking about this 3-day move up, and what we're seeing here, what we're seeing here is actually it's continued to move up right around this 10-period moving average, and my expectation is that we're going to try to fill this gap, and the if I bring up the stream, hang on one second. Okay, we're ready to go. It's going to be really difficult. I can't see the questions on the other stream. So if you are on the first stream, you want to join us on the second stream, it'll be easier for me to answer questions ultimately. So this has kind of created a real cluster at the worst levels. So I'm just going to go ahead here. I'm going to get this has been very disruptive, screwing with everything. Okay. There's a couple of things here. The market grid is suggesting 3147 is the first major resistance. We've printed 3141. I talked about in the commentary last night that 3147, 3171 is going to be the point where a reversal is likely to occur. When I say reversal, and just going back for a couple of videos, I saw some comments on the channel talking about the pivot. It's very possible that there's a lot of vernacular out there which I think is incorrect. I'm an old school technician, been around a long time. There's a lot of really bad stuff being taught on the internet. People are making shit up. I've seen some of this stuff, and it's just like, it's laughable. And there's some good analysis out there too, but there's a lot of terms, and there may not be some of these terms that I use from my viewpoint of doing this for 40 years and having the contacts that I do. Maybe the terms are different, but when I say there's a pivot point coming, the pivot that I talked about in 2 videos ago was actually talking about the potential for a right shoulder where it rallies back. I talked about this where we get 5 days down, which we've had. We're working, this is the 3rd day up in this pattern. And typically you'll hear me talk a lot about bar patterns and things of that sort, where you're going to get a 535, 538. There's probably about 12, 14 different combination of bar sequences. And I always tell folks when I am in, in focus, I'm going to talk about this bar counting. If I were to go into a casino, they would ban me because I'd be a card counter. And I do a lot of bar looking at bar charts. I don't use the candlesticks because I just want the bars. I just want to see the clear data. I don't care about candlestick patterns. Don't care about them. They look really pretty. I love how they look. And our portfolio expert software has candlesticks in it, all that stuff. But that's what people like to look at and there is some great analysis. I used to work with Steve Nissan at Merrill Lynch many years ago when he wrote one of the first books on candlesticks. And the whole everything that's going on in the world now is actually happening from the standpoint of this sometimes bad context a lot of folks are working on. So when I talk about these bars, I talk about pivots, I talk about a reversal. A reversal is the opposite of what's been happening. So we're looking for a downward move, but we have to finish this third bar here. So as we look at this, we continue to see this thing print up into this 40 handle. And yesterday we printed 51. And if you looked at the market grid yesterday, it was really phenomenal from the standpoint of I just put it up on the screen, the projection yesterday on R3 was 31.53.71. The high was 31.53.45. It was an exact hit, and the market reversed off of that level and traded a little bit lower. But this area, 31.47 to 31.71, the gap is all the way at 83, so we could trade up and go above the 0.76 number that I had on the video last night as far as the retracement goes. But ultimately, we're going to see a retracement, and it's going to be potentially back to the numbers I talked about in last night would be the 30, I'll get this right. Yeah, 30.14 with the possibility of going down around 29.80. And I'll bring these numbers up here in a minute so you can see them. But the bottom line is that this pattern that's unfolding is still part of a larger pattern, which is a consolidation. So I talked about this in on Monday's video, is that we missed the overlap that would have negated the that this is a wave 4 and moving up into a new high up above 3,400. That did not occur, and what happened is we came just short of that on the reversal on the Fed's manipulation move, talking about buying corporate bonds. I have no idea. No one knows if they even bought corporate bonds. And this, this is part of it. I mentioned this last night in the commentary that Alan Greenspan used to make up words, but all of these guys have always been jawboning from the standpoint of how they posture themselves. So Powell sitting there talking right as we speak he's trying to posture himself and convince everybody out there that they've got control over things. And I don't know that they do. So we'll find that out. But I want to go back to this chart. What we're looking at then is the 5 down, 3 up, and we should get a minimum of 3 down. So we get a 5-3-3, but typically it's a 5-3-5 pattern, which suggests that this would take us into Tuesday or Wednesday of next week. Now we need to close. We don't need to close lower today, but it would be good if we did. We printed, if I go back to today's values here, we printed 41.16 high. R1 is 3147.99. So what we're seeing here is that this thing moving into this range, and I think it's really struggling here. And today's close will be important, and how we come in tomorrow. I think after Powell gets done talking, there's not going to be anything to talk about. Maybe we go back to, Texas numbers on COVID. I don't know what the market's going to actually come up with and what's going to be the next patterns that they're going to look at, or what the next sequence of sentiment influencers is going to be. But for right now, we're going to leave the Fed influence It's going to go behind us. So we've been listening to Powell for a week now, basically. Last week at the FOMC meeting, and now here we are in testimony for 2 days in front of Congress. And it's just like a regurgitation of everything he already said. I talked about this on the commentary last night, that really all he did was do the alphabet soup of everything that the Fed is doing right now to support the markets. And the question is, will they be able to continue to support them? How many bullets do they have to keep shooting at the market to keep it going? This was a scenario for back after the 08, 09 crisis. As we came into 12, 13, 14, that was the big talk on the street. Will the Fed run out of bullets? Well, it appears they have unlimited bullets, but the only reason why any of this stuff works is because people believe it works. And you can see, go out on the internet for about 5 minutes and all you see is don't fight the Fed and all that stuff. But that's yet to be seen. I've been around a long time, and I mentioned on commentary last night, Alan Greenspan was at least entertaining. We've got a guy right now that I don't know what these folks are thinking, how they're actually putting together their so-called models. I don't know if we're supposed to have a freestanding separate Federal Reserve. I don't think that's the case at all. I think the influence of everywhere from Trump to the Treasury, the administration, and all these folks are working together. I don't think there's any separation at all right now. So I think that is something that we're going to have to deal with going forward. And this, we'll call it manipulation, we'll call it influence. We went through a similar thing, folks, back in 2010 and 11 when we saw the European crisis going on, and every politician, every government, the ECB, the Fed, everybody, every central bank on the planet was going together. I remember, I think it was 2011, they did a joint statement together and they pushed the markets up about 14% in 10 days by doing this concerted effort. So we still got to deal with this, and this will derail, sometimes it will derail some of the analysis, but going through all of that experience, going through that manipulation, I can tell you, I know there's people on this call right now that have known me for 10, 15 years, and they followed my work, and that was very, believe it or not, very predictable back then, even with all the manipulation. Now, the little intervention and a couple surprises they had, that's the case. Powell keeps using these words that they're going to be forceful, proactively, and aggressive. We're going to see, because they came in and jawboned the market the other morning. Like I said, I don't know of any proof, and we don't ever know, that they actually bought any corporate bonds. They just said they were going to buy them. So that is going to be significant. So I've got my legs back under me, folks. Thanks for the patience and all the disruption going here as we started today. So let's go ahead and go back to the charts. And I want to show you something, because it was really interesting. I was talking about this on the market grid, yesterday's high being spot on. And what I want to, I'm going to bring something up here, and I'm going to show you a tweet that one of the folks out there in the system put out there. And I just, Vladimir, I just think this is brilliant what you put together. I don't know what platform this is. But this was brilliant. He took all the numbers, all the grid numbers, and put them on a chart, on a 5-minute chart, and mapped them out. But his comments here were brilliant, and I just want to show this to you folks. If you're not following me on Twitter, it's Bob Kendall. It's actually Twitter Portfolio Expert, and there's no E in the expert. this was just brilliant because you can see the numbers, some of the trades that he was able to make off the numbers, and some comments he made. This one up here, this was exactly what I've been talking to people about doing. And there's a video out there on the channel that talks about these numbers. And what you see is we traded right up this. This was the 31.53.71. We traded right up into that number, and then we saw the retest of that number. It failed, and what a great trade! And another bounce off. It went down to the number. So just to unpack the grid just a little bit, is what we see happening is that the once you go through a number like up here, when it comes back down, that's now your support number. You can look for trades. You can use these 5-minute graphs looking for patterns to locate these reversal points. And when you get this stuff down, it is killer. I've been using this stuff for a very long time, and it is so powerful, it's unbelievable. So anyway, I wanted to show this to you because I thought this was brilliant, and I really think I know there's some other folks who have been commenting and making some good money on the grid, but this is really, this is amazing. This is a great work. It makes me feel really good when people take this work, actually took the ideas and concepts that I talked about, and then applied them. This is awesome. Thanks again, Vladimir. If you're out there watching or you see this, I really appreciate what you did there. So let's go back to TradeStation and the grid. Now today we're seeing the 41.16 high I talked about a minute ago. We're still kind of hanging around now, and this thing's going to hang around as long as they got Powell on the stand and he's talking. They're going to. My expectation is we may see a sell-off in the next hour or so, and I'm just going to go. We're going to start doing questions here pretty soon, and I'm going to have to depend on Jay to try to get help me out with some of the questions and stuff, because I've got two streams simultaneously going. I think we've got 444 on one and 220 on the other one, so I apologize for all the confusion. But these patterns are so important to understand. And I was talking just a few minutes ago about these 535s. There's a lot of trading opportunities around this type of pattern. From the standpoint of what's been going on with the models and the positions, and you can see these positions should match pretty good with, you can put the INX in the WaveTech tool if you're using that. And you can see these trades. This is a 3-2 trade. What I want to do is just draw in a couple things, and just this trade here has been on since I believe it's May 5th at 28.40. It's still long. The primary trend line, and not a trend line but a demand line, is that 21 period moving average. And those of you who've been watching the channel for a while, you know that what I talk about is this trend following methodology. The PPMs are measuring the angle of attack of a trend, and based on the levels of the PPMs, they're telling me what the probabilities are for markets to hold support levels and to surge. And you have to know that momentum actually precedes the price. And just to show you this, you're going to see down here the PPMs, they peaked out way early. So each one, because they're measuring different time lengths, I'm just going to draw vertical lines when these things came in. So each trend phase. So what WaveTech, what I do, what my methodology does, is actually looking at trends on 3 different levels, and this is a really good illustration. In fact, I'm going to clean up some of these arrows and redraw these. So first peak, second peak, and then the third peak. Each one of these began a next level of trend. So we're in basically the third level of the trend. We're still seeing PPM2 corrected, or PPM3 down here corrected. Now it's breaking out of its first and second derivative. PPM2 is just in a maintenance mode, as well as PPM1, which is flat. It's at 0.5 plus 0.29. Anything over 0.25 is a trend, which tells us at 0.25 or greater, there's only a 40% probability to drop below the moving average. And the bottom one at PPM3 is 0.34. I use 10, 21, and 40 period moving averages. The reason why those numbers is back in the 80s, long ago, we were trying to identify patterns. WaveTech is understanding patterns, combining Elliott wave, moving averages, PPMs, and probabilities to come about what these trends are doing. So the 3 PPMs are always tracking these 3 levels of trend. And this is a daily chart. This goes next level chart. We can go to weekly and we can do those trends. But the key element to know when you see, and I don't use stochastics or relative strength or any indicator. I personally would stay away from some of these indicators that do the overbought, oversold thing, because markets, when they're going in a direction, they get overbought and they stay overbought. They get oversold, they stay oversold. What you want is indicators like these that don't get overbought or oversold. They measure the output of the markets. So it's almost what I'm doing here is trying to keep this market into a place where keep the perspective of the market in understanding of what's going on within these trends. And that's what I talked about on the channel. That's what my work does. That's what the models do. That's what everything does that I do. Now, this is a substantial thing to understand, because this will give you the perspective of what I talk about on channel. It'll also teach you a lot. And I am working on getting things on the App Store and getting some way for you folks to get these PPMs, because these things are amazingly powerful. I'm trying to figure out how to get them programmed and protected, because I don't want my code out on the street. So I'm working on, I'd love to get this thing on TOS and a couple other platforms. I'm researching everything now, so we'll see how that all happens. But this is the 3 levels of trend. We're in the 3rd phase of this trend. This trend, the other thing that can happen with these PPMs, they can recycle. So markets can go into sideways trading range, recycle, and actually get out of a trade and regenerate it, and it all starts. Those of you that came on the WaveTech meeting yesterday, you'll know that I talked about this recycling of trends and how things will refresh. So market trends accelerate, consolidate, and those are the things that I'm doing my best every day on the videos to talk about when I'm going through the technical section of the channel, because that's what I want you to understand, what's going on with these short-term ideas. I don't do hodl, okay? I don't stick my head in the sand. This analysis is going to evolve. It's going to change. It's going to change on a dime sometimes. So, having mentioned the weekly, let's switch over to weekly for a minute, and I'm going to finish up this section here. And then I'm going to cover the dollar and gold and do some other markets, just run through them fairly quickly. And then I'm just going to open up the channel to questions and start getting into your questions and things that you want to know about. So the same thing is going to happen potentially on this trend that we're in right now. When we start to look at the weekly graph, you see the same thing that I just talked about. The PPM1 is peaked. And because we're in this big corrective phase, this is where I've been talking about the potential of moving back ultimately to the 200-week moving average, which right now is 2690. Let me make sure I get the right value. Yeah, 2690, and it's rising very slightly. So ultimately, if we can't get through these levels, punch through the top end of this resistance, this 2370, I'm sorry, 3170, to this 3400 level. If we stall here, then we will come back to this at minimum of going back to the 200 week moving average. PPM, looking at the weekly, PPM2 down here where my cursor is starting to accelerate, about to break through its second derivative. What this tells us is that the probabilities of the moving average values holding or the market entering into a sideways range is very likely. So moving average 29.39, 30.26, those are going to be the support zones that are likely going to dominate on any downside. That's where we're going to be holding in those ranges right now. We're just not going to get much below that level. And this is what the analysis of the 535 that I was talking about a few minutes ago, that's exactly what this thing is telling us. All right. So I'm seeing some comments. I'm being repetitive. I'm trying to make some points. I'm trying to teach as well on these things. And part of this is just through the disruption I had on the start. So let's go ahead and Jay, I know you're hearing me. So if you can get some questions to me, and I will start digging into some question. So I see one question that came up, Kishore, you've got, what do PPM use? Their proprietary logic. And they're basically looking at rate of changes, first and second derivatives of the moving averages. So I'm looking at the internal moving average values. There is a video on the channel that says understanding, I think it's understanding my process or something like that. So if you go down from the uploads, you'll go down, you'll see there's a video on there, and I'm going to be doing more videos on some of the stuff that I'm talking about today. But these patterns are this weekly pattern. We saw a big reversal last week. We're seeing a move back up. My guess is this 535 pattern will set us up for that. Yeah, Jay, if you hear this, don't worry. I've got 2 streams going. I didn't know you could do that. We'll just keep it like it is, and it's fine. There'll be two posts on here, so that'll be okay. As long as everybody's hearing it, that's all that matters. Okay. All right. Yeah, but there's someone asking a question about will these indicators work on day trading? Absolutely. We can just take this thing and flip this right over to a 5-minute graph here. And let me get rid of one study here. Yeah, so everything works. And this stuff that you're seeing on the screen here is ultimately going to be available. My exact setups, my TSWs and all that stuff is going to be on the App Store on TradeStation. I'm just not sure of the timing of it. Shouldn't be terribly long. But this stuff is all really powerful to use. So this is a 5-minute graph. It's going to give you a market map for every 5 minutes to trade off of. And probably a 15-minute time frame is going to be a bit better, but it's going to be really, really powerful. And, you know, I guess I've been a trade station user since 1992. Matter of fact, I was one of the first 300 on the trade station platform. And there's actually user studies that one of my former companies built, still embedded into TradeStation. They're still out there, and so many of this of the analysis on the short-term charts, anything you'll be able to do, and you can even put models on here as well. Yeah, so yeah, that would be good. Let's somebody's asking about a longer term perspective. Let's do that. And listen, I owe you guys for patience for being patient with the bad start. We're going to make TradeStation the bad guys today, and you know we'll go through quite a bit of stuff. But let's do that. I think that's a valid thing to look at. So I'm actually going to go because we're going to go deep. I'm going to give me maybe 10 or 15 minutes on this. I think this would be good. I want it documented anyway, and we'll just do it on the fly. This is something that I think will be of great value, and we'll try to find this on the timeline and maybe be able to crop it out of this show. So let's get into it. I'm going to go to the Dow Jones, which I focus on the S&P. I have for many years, and that's for just a general analysis. And those of you that have subscribed to the WaveTech research tool, you're getting into the world I really live into, which is 17,000 symbols. You know, we had somebody sign up for WaveTech, and this thing wasn't built to trade indexing as far as that goes. Some of the stuff it works really good on, but there's 16,500 symbols. There's so many good ideas to get off of this thing. It's amazing, and this is important. So let's get into. We're going to go Dow Jones. We're going to go long term here, and it's going to take me. Let me just look at another screen. I need you guys to comment real quick on this. How does this screen? Is this easy to see for you when this comes up? Just let me know. So for the moment, we're going to go no indicators. Okay, awesome. So we're going to go no indicators. We are going to go super long term. I believe I can go. I'm just going to walk forward. We're going to look very long term perspective. Then we're going to go into step in. We're going to almost go by decades and by larger term trends. Okay. Okay. Like I said, we're going long term here. This right now, this is a daily. I'm going to switch this to monthly, and the data didn't go back far enough. Bear with me, folks. This is on the fly. All right, here we go. So what we're looking at is back to 1940. I can actually go back to, I think, about 1920 on this chart. But this is going to give you some real perspective of what's going on. And this is not a log graph. Maybe I'll convert it over so we can get a viewpoint of what this really looks like. But this is what we're dealing with here. And this most recent craziness that we've seen has had more impact on the longer term trends than one would like to believe. Now, I know there's a lot of folks on here have read my commentary, listened to me for years. Matter of fact, maybe 10 or 15 years. I've noticed a couple folks that are long-term customers. And hey, Andre, thank you for the super chat, man. Appreciate it, really do. But this long-term view is showing us just on the Dow Jones. Look at the damage this has done. People are talking about all-time new highs and resuming a rally and all that. That's not what's going to happen. And I've been going on for quite a few years. And what I'm going to say is that just to bring this perspective in is I've been talking about a generational high. So I think, and I said this early on when this crisis started, I think that this was a very significant event. If you notice, we traded all the way down, the same moving averages on here, 10, 21, 40. And we can try to, matter of fact, I will attempt to do a wave count on here. And I was called crazy back in 2008 and 9 when I show you the wave count. This has been my wave count for a long time. Everybody had the end of the world in 2009, and I will show you here in a minute. But this perspective is important. Even though we traded down to this 40-month moving average and bounced off of this, I'm gonna draw in some stuff that I think is highly possible to occur in this pattern. So here's our spike. I am going to change the color on this. So here's the spike. Most likely what we're going to get, I just want to draw some kind of wedge like this. It's very possible, I'm just going to scribble in here, that what we're going to get out of this market is this broad, crazy volatility type pattern. We don't just shoot the new highs. I'll bring the PPMs up in a minute. We don't shoot the new highs. Everything's not going to be okay. Nothing's going to be like it was before they shut down these economies. And those of you who follow me, you know that I have talked about a lot about dislocation of capital, other elements that have come into literally destroying industries. Look at what's come out on Hertz today. I mean, I was talking to a buddy of mine the other day, that I've known for a long time. I thought, what company comes out with a new stock offering and tells every investor not to buy it because they might go, it may go to zero. I mean, now the SEC's involved in going, yeah, you're right. We're not going to let this thing happen. So this is a crazy time. So we're going to see a major, and I said this early on, and the channel has gotten more popular. Everybody's just subscribed and doing this stuff, man. I'm so appreciative of everybody. And we went over 10. We literally started this channel in a public mode about 10 weeks ago. We're at 10,000 subscribers, and it seems like it's just going through the roof right now. And I'm excited, and I take my job serious. Everybody knows me, this is serious stuff for me. This is not some hype channel. This is about looking at things, making logical statements. So when we look at a market like this, we look at what's going on in the economy. We look at everything that's going on. There's no way you can come up, go, everything's just going to be fine. The COVID thing's over. Maybe, let's say it was over. Let's say they had the best vaccine in the world. Everybody gets it. No one ever gets COVID again, right? That doesn't matter because they've destroyed businesses. I talked a number of weeks ago about a local business that I saw closing up because of this, and they're everywhere, and not to mention all the, social unrest that have just destroyed downtown areas and businesses, and people can't. It's terrible. I mean, everything's terrible that's going on in this country right now. So you just don't have an environment like this and just get better. It's not going to happen. There's going to be a multi-year transitional phase that business is going to change. I was talking to some real estate people yesterday. My brother's a commercial real estate guy, and we're talking about what's going to happen with commercial, what's going to happen with retail, there's just going to be a reconfiguration. There's a whole new, we all know this, there's a whole new pattern that's out there. Is now, look at Zoom. Everybody's on Zoom meetings. I did like 4 of them yesterday, but I used it before anyway. I've always been a virtual presentation from that standpoint. But now it's like normal. We deal with a lot of investment advisors. I was talking one the other day and said, are we ever going to see our clients face to face again? But it's the new normal thing. I hate to use those words, but it is what's going on. So this pattern, back to the pattern, this pattern is very likely because it's going to take years to figure this out. And what we don't know is that it doesn't end up doing this. That it does that, finally consolidates, and something breaks. The Fed runs out of money. They just, I've said this. I'm just going to continue on this rant for a few minutes. And whoever got me into this, you asked for it, so let's continue on. And so when you see this kind of pattern, you look at a potentially generational top in these markets. This type of pattern, when you see these spikes, this destroys. This is a monthly graph. We're looking at right here. We're looking back to 1990. I can move this back all the way to 1927. It's just a parabolic curve basically. And, I guess the only thing that happens is you look at society as we once knew it changing. Whether I see a lot of comments on the channel, and I made a video, I don't know, maybe 2 months ago now, that was called Unintended Socialism. And that's what we're seeing here. We're seeing the Fed supporting markets, the alphabet soup that Jay Powell's talking about over and over. This is probably if we're lucky, okay, we get this. So from my viewpoint, when we get to this kind of environment, this is actually great for us, folks. For a trading community, being able to do short-term in and outs, the whole buy and hold community, this indexing community. If you're an advisor listening to me, that stuff is so yesterday. And the reason is there's no money in indexing, and there has been. It's been okay, but when you see this kind of disasters happen, it's just not. It's not going to be. On our website, Portfolio Expert, we talk about dynamic indexing. Individual stocks are going to have to come back. There's no way this passive world is going to survive long term, because at some stage, not making people money is not going to work. And and if you're going to trade these indexes, then it's a different story. There is some money there. But to do pie charts and holding, I'm sorry, it's just not going to work. Okay, it really didn't work anyway. There was a period of time from 2000 all the way to, let's say, 2013. It was a lost decade. You did buy and hold. You didn't make any money for 10 years if you held during that period of time. Now, if you happen to get lucky and come in at the bottom of '03 or the bottom of '08, then you made money. But if you just held it, it took 13 years to make new money. If you bought in 2000, it took 13 years to make money. And so anyway, but this pattern, I'm just telling you, I'm gonna erase some of these lines here. But if we were lucky enough to create this and stay in some kind of an environment like this, maybe retest the highs, these are the kind of patterns that if you make a new high, there are sellers everywhere. These are great patterns to sell. So when we start to go from the minutia that I talk about every day in the channel, we start to look at the big giant picture of what's going on in the markets, then you start to get a perspective. And whoever asked this question, thank you, because this is really a conversation I've been wanting to have for a while. And it's very difficult to do this on a 12-minute video that I do. I try to keep my videos down somewhere between 12, and sometimes they'll spike up to 15, 17 minutes. Listen, I get it. And none of us have any time. So I try to keep them down and be really concise. So I love these live streams. So it gives me the ability which to go on some kind of major rant like this. And I hope you guys are enjoying this. But this is the best scenario I think I can come up with. I'm going to erase these lines for a second. Just going straight up like this again? Really? Think about it. Think about what's happening in the economy. Think about the socialist type strategies and fiat currency and all that stuff. And we're going to go, I'm so heavy into this thing that I'm going to have to go into we'll maybe look at some longer term Dow charts. I don't know how far back the data I have goes, but there's just a lot going on. It's fun talking about day-to-day markets, moving money around, all that stuff. But when you get into this conversation, it's much different. It's much more serious. I'm trying to frame this right so that you understand that there's something big happen. And there's quite a few young people that are on this. I've got children, and I don't fear necessarily a depression, but I do think there is some very challenging times together, from societal type issues to financial to you name it. And 2020, it's interesting that it comes in on an even number, but this decade, it could be just that. It could be a decade or more that this pattern. Now think about this just real quick. This pattern I just drew, we're going to go back with the wedge real quick here again. But to get through this pattern here, you can see about every half inch is a year. This out here is probably 2030. Okay? This is a long period. There's going to be all types of different things out there that are going to have to be reconstructed now. And in the end, we'll probably be better off, but there could be an entire reconstructional period of financial markets, of economies, of society, everything. I think that's the conversation. When I look at what's going on out there, crazy violence, all this stuff. These are the type of shifts in times in history. We are living through a point in history that is absolutely um, amazing. No one ever thought we'd see this stuff. So we're all part of a major historic event, I think, that is happening. And this, I'm glad I brought this up because this is the perspective that if you don't understand, it's just going to destroy you. I have dealt with wealth managers for the last 22 years, and it's been good. But I've watched the trends. I've watched them embrace my technology. I've watched them run away from it. I've watched them get passive. I've watched them get destroyed at least 3 times in the last 15, 20 years. And that's just one of those things that I think we're coming into an amazing time. By the way, from a trading standpoint, this couldn't be better what I'm talking about. There's going to be amazing opportunities in this stuff. And it's really interesting to see the financial services, stock markets, and everybody come in. And I talked about privately, I didn't have the channel, but last year when it was announced that mainstream players like Charles Schwab and others were going to come out with fractional shares, it absolutely woke me up. I'm not a guy to retire, but since that moment, since last year, I'm doing this stream. I'm doing 5 videos a week. I'm working hard. We're trying to get people situated, and I plan on doing this to help us all make a ton of money in these markets because there's going to be so much opportunity. And it's not going to be buy and holding. It's going to be moving assets in and out. Everything, just like I talked about on Zoom and society, how we present ourselves, the same thing's happening in this stock market. Okay, I think I'm getting to the end, but this is an important perspective. So let's break this down just one more phase. Then I'm going to be done on this. We're going to go to just individual stocks, everything that we've got coming out there, and that will be the next thing we'll do. So I'm going to come back to somewhat of reality, but we're going to stick with the Dow Jones because this spike, even though this V bottom is talking about, this is the classic that is setting up here. And man, I got to tell you guys, I mean this. Everybody that's embraced this channel has given me the ability really to get some my voice out there and really help a lot of people. And I'm super pumped on all this stuff. And I love what I do. You guys should know this. But anyway, I really appreciate everybody that's on here watching me, that's embracing the channel. And I have a lot of passion for what I do. So thank you for being part of this channel, everybody. I mean that. So weekly, look this. This is actually probably just to get this to go back just a little bit more. It won't let me drag. But this same pattern, this spike here is just part of that zigzag pattern that I was showing you. And I know we're looking, if we put up the NAS, it would look much different, okay? It's got a little bit different pattern, and maybe that's the new economy versus the old economy. And I will do that. And I see somebody go, are you saying Trump is manipulating? I'm saying the government is doing it. You got Goldman Sachs. Yeah, I guess I am saying that. It's not necessarily Trump, it's the government. You have to understand something about the governments. And those of us that have been around for a while and watch this stuff, the government's always been the government. It doesn't matter who the president is. That's totally irrelevant. The government is going to survive. The government is like a corporation, right? Corporations will survive. They'll do and say anything. Look at what's going on out there. They'll say anything to survive. They'll agree with anybody. They'll do whatever it takes to survive. They'll change their messaging. They'll do whatever. That's what you're seeing out there right now. I'm not invalidating or validating. I'm just saying that's what you're seeing. That's exactly what they do. That's what governments do. They will do anything to survive. They will print money. They will do. That's what they do. So, yeah, I am saying that. Yeah, I don't think Trump is making. Somebody said Trump is making the Fed shut its mouth. No, the Fed's mouth is wide open, man. It's wide open. And the Fed wants to survive. All of these entities want to survive. And, maybe a good idea is to go out and study some of the older German economies. You can see what the Germans did in 1921 and hyperinflation and what they were doing to survive. Well, they got Hitler out of that stuff. This stuff that we're seeing right now is crazy. That's all I'm going to say. I'm trying to get out of this loop. But what I'm telling you is corporations will do what they have to do to survive. Look at what Hertz did. I mean, I've got to read some more of that because this is just fascinating. They know they're putting out a bogus offering to stay alive. And then they even admit it. And then the SEC comes in and goes, wait a minute. So there's going to be a lot of cheap cars for sale, man. The Hertz is going to have a lot of cars to sell. So anyway, all right, let's go to questions. I think I got that out. There's a lot more I could go into on this. Let's talk about that. There's some other things that I can go into if you want to talk some more of this stuff. If you found this interesting, when I opened this up, I just started realizing everything that really is going on in the economy, what's really going on in society, and the effects on the markets. Let's face it. Hopefully I'll close out here and we'll get to questions. Let's face it. These things that are happening are going to affect everything in the economy, how money flows, where it flows, everything. We've already seen that just looking at the contrast between the NASDAQ and the other markets. So like I said, I'm going to start working on putting some things together, looking at what maybe is the new economy, the NASDAQ versus the old economy, which is certainly the Dow Jones, what we have here, even though the Dow Jones Industrial Index is you want to talk about manipulation? This is the most manipulated index ever known to man. McGraw-Hill has a committee, and they try to put stocks in to keep this index going up. It's a joke. And the S&P 500, we have in our models, we follow all 500 stocks, and Jay, who's on the line, has done the maintenance on this thing, we change every time there's a constituent change. When they take a stock out, put a new one in, our models map every stock we trade. We have a model that trades every stock in the S&P 500. It's nearly tripled the S&P 500 performance in the last 25 years. But what's happened is of the 500 stocks, I think the last time I looked, there have been 477 changes to the index. That's 477 changes. Otherwise, it ain't the same thing it used to be. It doesn't even look or act like it does. So it's constantly, the S&P 500 this index is alive. It's constantly moving, growing, and changing. It's it's a cap weighted index. Same thing. Dow Jones is a committee. A committee drives what goes into the constituent list. All of these indexes are driven by literally a handful of symbols. So when you're trying to compare performance and things like that against these indexes, they're bogus. Inside of our portfolio expert, we actually give you the ability to build your own indexes if you want. You can do some really crazy things with that software. But there's probably better metrics to compare performance versus the S&P or whatever index you choose, because they're all bogus in a big way because of the constituent change. All right. I think I got that out of my system, folks. Thanks for listening. I really appreciate it. So we're going to go back to our primary screen. I'm going to clean this up, and we're going to start talking about some symbols here and going through. So I'm going to be looking through the timeline. Let's go up here and just see. Yeah, so market's starting to. Looks like Mr. Powell may have stopped talking, huh? We're starting to slip back a little bit. Very interesting. We printed it. We printed 47 high on the futures. Let me go over to the cash here real quick. 41.16 still the high. So the futures printed overnight. They printed up, but I think if we can see this thing sell off a little bit more. I was looking at futures. I forgot there's a discount in the September futures right now. So what we're looking at here, 34. I think if we close back under 20, 24, maybe 15 down towards the low of the session, that's going to give us that confirmation that there's going to be probably that will be the beginning of the 5-day down. So, wow, I'm actually that was what I just talked about, folks. Was I guess I saw a comment just now. Somebody with experience actually finally really telling what it is. There's a lot of stuff that I would like to say about a lot of things, and I usually don't do that. I stick to the technicals. So it was nice to air out some of that. Yeah, Powell who? Yeah, interesting. Um, Okay, folks, let's get some current stuff. I don't know on the timeline. I have two streams that I am trying to watch here. Yeah, I've got almost 1,000 people on two streams right now. So what I'm not seeing is my live chat is not working on one of the streams. So the very first stream, if you're on that, unfortunately, I can't see the live chat. I can only see the live chat on the second stream, unfortunately. So I for whatever reason, it's not showing me. Let me look at one more thing because I want to. Yeah, I just can't see it. I apologize for that. It was a bad thing that happened. So I'm looking at side by side, so I can't see. So anyway, by the way, we got a lot of folks on here. If you guys are enjoying this, would you smash the like button for me? let's light this channel up. Let's really, my goal here is to build a serious community. And, I'm a serious guy, and I'm serious about money. I don't like losing money. I don't like people losing money. My entire career has been about protecting capital and helping people to do that. Too many people sometimes, especially in the risk, in the wealth management world that I've lived in for 20 years, get way sometimes too worried about the returns of what they did versus the risks that they're taking and how they're protecting capital, because capital preservation is absolutely everything. And that's just been what I do. So, let's this is getting to be a lot of fun. So, on the guys on the second stream, if you're on there, I'm going to just hit on some stuff I know you guys want to hear. We're going to do Tesla, Bitcoin. I'm just going to start running into that stuff. So, just real quick, yeah. So recession next year. We're in a recession right now. Okay, the fact that we see retail sales rebounding 17%. Well, that was from terrible. So these metrics look good. Market participants and the algorithms and all those guys can react to these things. You have to understand there's a lot of algorithms out there that are running literally, running based on Twitter feeds and different things that are out there, news lines, and they're generating buys and sells off of this stuff. So that's going to be it. Thanks a lot, Elaine, for smashing that thing. Okay, so let's go. Let's just start Bitcoin. That'll be easy. I talked a couple of weeks ago about Bitcoin, and I still love this pattern, by the way. This is the daily. I want to go out to a weekly chart here. This thing just bounced off the 10-week moving average. Look at the PPMs on this. Those of you who've been watching this channel for a while, look at the PPMs on Bitcoin. We're looking at we got a 3.16 ppm over here on the left side. You'll see the value. Also see it in the red right next to the ppm value. And we bounced right off that 10-period moving average. Let's bring up the data just so you can see this. Ten-period moving average 8882.96, the low 8907. So a pretty good close hit on that. This pattern to me, and I'm going to put some Fibonacci projections on the screen. This pattern to me just looks explosive. I really think we're going to challenge 14,000, maybe looking for 20,000 plus, maybe an all-time new high on Bitcoin. When I look at the longer-term prospects of this thing, it just looks better every time I look at it to me. And I've traded this thing quite a bit. So let's go. I don't think there's much data here, but it's okay. We'll look at this thing just for a minute. There's no PPMs. There's not enough data to collect this. I'm going to start. I might be able to bring something up. I think in our portfolio expert, there's Bitcoin in there. I'm gonna bring that up on the other screen, and I'll bring it over if there's good data. I'll take a look at that. But this pattern here, this big reversal when we traded down with 2200, that was just the opportunity for a I wouldn't say a lifetime, but for a long time. And this pattern is that we saw here. This particular pattern is telling me that if we can take out this high over here at 13.8, we get above 14,000, then it's Katie bar the door. We're going to go absolutely vertical. There's a lot of work to be done, but the weekly charts certainly are confirming, going back to that there's something here. There's resistance overhead. I'm going to throw a market grid on this. And this is the weekly market grid for this week. We're looking at a range, looking at a range 8907 low, 8916 S1. So that was a good hit. And on the upside, 9645 R2. So it looks like we got an S1 R2 working this week. Above R2, next number 99. And we've seen this thing print up at that right at 10,000 a couple times. So that's most likely we could see even this week move up around the 9906 level. All right. Give me 1 second. I just want to see if I can. I just want to see if our Bitcoin stuff is. Yeah. Bear with me, folks. Yeah, it's not going to be good. Sorry about the delay. Okay, let's do Tesla. Everybody's favorite. Man, I am one of the biggest Elon Musk fans ever. Yeah, that's funny. I would like to get with Raul Paul. That would be interesting. He actually just interviewed an old buddy of mine, Hugh Hendry, and in fact, I've got some footage in 2010. If you guys are familiar with Hugh Hendry, he actually came as guest speaker at one of my national conferences, and I actually have a contrast between the recent interview with Hugh and what he was saying 10 years ago. And it's very interesting. And if I get a few minutes on a Saturday, I'm going to try to put the video together. I actually started working on it a couple of weeks ago, but I just don't have the time to get there. And yeah, I like to see SPY is starting to fade off here. I like it. So Tesla, Elon Musk, man. Anytime I get tired, I just say Elon, and I get going again, because that guy's just a maniac. And I people ask me all the time, when do I sleep? Not I sleep. I fit it in with everything. I'm very passionate about this. This is big to me. Yeah. So okay. So here we go. Tesla is trading up at its extreme. One 1009 R3 99204 and R 1009.58. The high so far 1005 even. So we basically pressed up into that RXT number, which is the extreme here. What was the low? 908, 917 S1. So we kind of traded between S1, S2. And the way I keep talking about these grid numbers, because I'm going to figure out how to get this stuff to you guys, because what it's going to do is give you the ability which to target this stuff, just like I showed you that Vladimir did earlier. If you didn't see that, in fact, I'm going to put it back up for a second. I love what Vladimir did here. This is one of our uh, followers and subscribers, but he used the grid to look for reversals and points on his work to match up with the grid that gave him the ability to do some amazing trades. And that's what I want to get this stuff to you. So no matter what the market, you'll be able to have that. You'll be able to have that analysis so you can see that. I mean, I just love this. I'm going to thank Vladimir again for posting this, because this was really good work. I really, really appreciate it. So sorry, I didn't mean to get over here. We'll go. But Tesla, look at the PPMs though. Now let's start talking about what's going on. This is exactly, I've said this in the last couple of live streams when I've been turned loose here to just ramble on, is that what we're seeing here is these markets trading up to their highs, and we're likely to see this thing top out here. PPMs are stalling, but we got unbelievable upward pressure. Now the PPMs, by the way, stand for price, pressure, momentum. So this is they got named based on what they do, okay? And what the PPMs do is they're looking at the angle that the moving average is moving and applying. We did a lot of research to look at when the probabilities are let me redo this. We did a major study of what the probabilities are when the angle of attack is at certain levels, and they change. So when you're at 0.25, you got a 40% probability of penetrating that number. When it goes to 0.2, 0.15, it goes to 50 to 60, and ultimately, once it gets flat, when PPMs are zero and the market's trading above there, then going below that average is no big deal. Then you have to go to the next average. And if you saw the early part of this presentation, what I was talking about then is that there's 3 levels of trend on every level that you look at. So if you look at a 5-minute chart, there's 3 levels of trend there. You look at a daily chart, there's 3 levels of trend that evolve in every sequence that goes on. It's just not Elliott, it is Elliott wave, basic 3 impulse waves, but when you get into trending, that's what the PPMs 1, 2, and 3 do. They are defining the 3 levels of trend. And that gives you an amazing perspective. I'm just hoping that this channel grows really big, and that I can teach everybody and start to get these indicators out there so that you understand these concepts. I've been using them incredibly successful for a long time for corporate money, my own money, everybody's money, my customers, both corporate, banks, everybody, right? So this is just really important to grasp. But what this is telling us then is that at PPM 1 at 5.32%, PPM 2 2.84%, you can see these numbers there in the red next to the indicator, and then 3.50, they're telling us that there is only less than a 10% probability for Tesla to drop below these moving average values. Now they're a long ways away. If we go to the most recent average here, 826 is the 10-week moving average, 21-week moving average, 727. And then we got 550. So all of these are in trend mode. And they're also advancing. So if we look at what away from percentage and look at the actual price advancing, last week this is a weekly graph we're looking at. Last week, this value was 784. Now it's 826. So we're looking at about 50 handles per week on Tesla. So next week it's 870, following week, so forth. And depending on what happens with this PPM, is starting to back off. When you get to these type of extreme numbers, you're going to see, it's going to tell you that we're going to go back to those moving averages. So at some stage, we'll see a correction. But the danger, there's a danger in this chart I'm looking at, is that this is basically, even though it printed a new high, that we're going to see some ultimate consolidation, and the pattern is likely to go into this really broad sideways range. So if you are a Tesla trader, you're going to be looking for the two-sided trade from here. It's been a one-sided trade for the last several weeks, and that we're going to possibly go into a large corrective phase. And I'm going to go to a daily chart here just so we can look at that. But you can see how this pattern starting unfold. We still have very robust numbers. This 10-period moving average, 953, that's support. You could buy, if it traded 953, you could buy that blindfolded and make money. But it's not going to trade there. But you look at the daily grid so far today, we're looking at 1005, 1018 is R2, and we had a low of 982, so we're kind of in no man's land on this. We traded just above S1, and we're still below R2. And most of the things, and there's a video on this, when you're looking at trending markets, they tend, if you're looking at a market that's going up and you're in one of these 5 or 8 day sequences where you're going up, sometimes they'll extend to 9 and 11. But if you see that, you're going to be, when you see this grid and you're in that early stages and you see the acceleration on the PPMs, what you do is you look for, S1, R2. That's a simple trade most days. And you're going to see this in the S&P and on the grid numbers that I put out. If we're in that, like we're in a 3-day uptrend, then you're going to see S1, R2, R3, maybe even extremes just because of the volatility levels we're at. Okay. But Tesla is trying to stall here, even though we're printing up here at 1,000. We're seeing it start to back off here. This thing is most likely going to go into the grid here, which right now that grid range is 910, 1054. That's going to be your trading range for Tesla. Okay, lot on Tesla, but I guess I got thinking about Elon and couldn't stop. Okay, just trying to find. That's funny, Gino. You got a man crush. It's funny. I probably on my downtime, I've watched a lot of Elon stuff. And I'm just really impressed with the guy, his work ethic, his unorthodox approach to markets and all that stuff. To how he handles companies and his thought process is amazing. So anyway, what else we got, folks? I don't see things on the timeline, so let's get. Yeah, it's awesome. I told you guys an hour ago or so. We've been going for a while that when Powell stopped running his mouth, this market would start to sell off. And we're starting to get down. We still got it. We need to print on the S&P below probably 3110 to really get this thing going, and then we could start to see some. We could start to go into the 30 handle. How about our airlines? I had a conversation on the WaveTech session we did yesterday in the training, that we got into talking about the whole Delta airline thing, and a lot of these airlines went up to their 200-day moving average. I think these things are failing. I would not be involved in them going forward. There is a chance that we're going to hold on this daily on Delta, and maybe it'll run up, but I don't think that we're going to see a new high on this run. When I was talking yesterday, it looked a little bit different. Some of the metrics are starting to change very quickly. So So yeah, every time I look at this TVIX, I guess it's sort of like looking at the VIX chart, right? It is the VIX. So uh, it's just a really, really tough trade to look at it. These things are bad. I just put the VIX up as probably a more cleaner look at it. VIX did get a pop. I talked about this last week, a move, close over 28, which it did, 28, I think it was. I think it was right here where, let me put a model on it. Let's just take a look. So the VIX, if you put if you put TVIX in on the WaveTech tool, it would have given you a buy on 1.2 model right here at 2757. This has actually got shorts on it too, so it showed a cover, but this is 2757. It was the buy, and we're trading 30.33, spiked up a few days ago, got up to 44. And these kind of trades and these type of indexes, you almost have on a VIX, you have to, if you get in one of these and it spikes up, you just got to take profits on them. They do trend. We see a trend over here on the right hand side. I'll put a cursor over here. There was a nice trend. There was a buy signal right there, and it was able to really ride this trend out. It didn't get out to over here, but at some stage with a VIX, these volatility indicators are tough to sell. And I'm going to go to somewhere else here while we're just doing this. I talked about this on a video, I don't know, about a week ago, and I talked about these rounded, these bell curves that happen in volume, and I have a much different view on volume. And when we start to see volume build up like we did, I was talking about a top forming, and when that happened, back in March, it was the bottom. The peak in volume is climactic in nature, and I look for a volume cluster building, and that tells me a turning point. And then what happens next? And it's too early in the day because they'll spike the volume because all the institutions come in that last half hour, last 10 minutes. Sometimes you'll see unbelievable amount of volume. But what you get from this, when you get into a really solid trend, that trend is going to have super relative, well, not super, but we're going to say relative low volume compared to these periods. So when markets are trending, volume goes down, and what makes prices move is not volume, but it is the aggressiveness of the seller or the buyer. It doesn't matter how much there is, it's how aggressive they are. So if you have aggressive sellers, they see a bid, it's sold, sold, sold. Back in the trading floor days, I've seen some of the biggest traders on the planet just hammer an entire pit single-handedly. I've seen Tom Baldwin in the bond pit hammer the entire pit, one of the largest markets in the world, literally just knock it down by knowing how to trade and how to hit the bids. You hit the bid, you lower the offer, hit the bid, lower the offer. That's what an aggressive seller does. When you're just going back and forth, you can trade millions of shares back and forth, and it doesn't mean anything. But it does mean something when the one side, the buy side, or the other guys get really, really aggressive. And that's what drives prices. Aggressive trading, hitting bids, on the sell side, and then offering at the previous bid. And electronically, that's what these algos do. And you hit the bid, you offer it at the bid where were just sold. So you put sides there so the next buyer backs off. And as soon as he shows you a bid, which is a nanosecond now, you hit that bid and you lower the offer. And you can move. That's when you're watching like a level 2 pricing. Since I'm talking about this, let's just put that on the screen. That's when you're watching on the left-hand side here, when you're watching these trade, that's exactly what happens. You'll see it hit the bid, and then it'll just like dominoes, and it'll go 4 or 5 bids, and that's what they're doing. They're hitting the bid, offering, hitting bid, offering, and that's the same way it worked in the old days when we used to yell and scream and spit on each other to trade. And you get a guy that knows how, or a group of people that they just start hammering the market. If there's a bid, they sell the bid and they offer the market, sell it, offer, and that aggressiveness is going to be there. So, hey, Kevin, I saw you ask a question. Yeah, the buy and sell thing. I was working on getting everything on the trade session on the App Store. That is the plan. Yeah, awesome, man. Dow futures down 150. Right on. ES 3106. I have to tell you, folks, I made the comment in last night's video that this was the perfect setup. It was the perfect storm for to finish this 3-bar. I just wish it would have printed R1. It would have just been perfect. It would have really been perfect. We came short of R1, 31.47, 31.41.16, I think is the high. So yeah, I see futures here now down 13.50. There's a mismatch last night on the close of about 5 handles, but this thing is starting to accelerate. You can see here, and exactly what I'm talking about, and getting these little educational moments and how these markets move. People think they move by volume. Volume is bullshit. That's all I'm going to tell you. Volume matters, but that's not what moves the market. I've been in trading pits. I've been in environments that I've seen a ton of things trade hands and the price is unchanged. But it's that event that I just talked about. Yeah. So, Jonathan, yeah, are you looking at TVX now? It's one. Yeah. Hey, listen, if you guys are playing, this is a good point. If you guys are playing this, I don't trade TVX. I can look at it randomly on a screen like I just did. They're hard trades. But when you see this, and we've got this set up, and I've talked about this stuff on the channel, jump on this shit, man. Don't mess with it, You got to be the aggressive. You've got to be really aggressive on this stuff. So this is the beginning. So this thing should drop at least to 3104. I mentioned a number. We're going to kind of all over the place today, but that's okay. I mentioned a number on the commentary last night of 3061. And 3061 is the trigger point right now for our short-term model. So we went long at 2844 on the S&P. 3061, a close under 3061 today, won't happen, will be the magic number, will kick out the short-term trade. Tomorrow, that number is going to be probably 10 handles higher. It's probably going to be 3071. And so that number is going to go up every day. So in the next 2 or 3 days, we're going to get closer to getting rid of that short-term trade, which is the next thing that will happen after getting out of the short-term trade. We're neutral on the S&P, on the intermediate. We're going to be neutral on the daily, and the monthly is neutral as well. So what that tells us is exactly what I've been trying to set up here as a move. When I talked early on the show, is a move to that 200-week moving average, 2690. There's a lot of other stuff ahead of that. I talked about the moving averages on the monthly. That's going to be your first level of support. You probably move down, consolidate, and then there's probably another level. This thing is likely to fail somewhere in here. And I talked about the ABC pattern, all kinds of stuff. So, keep watching the channel. I try to do my best to make sure that I am putting things out in a logical way so you can follow it. My goal on the channel is to incrementally update the analysis day to day. And I try to follow. It's basically an ongoing script is the best way to put it. And that's what I've always done on my daily commentary that I used to write, and before I went to video mode and went to YouTube to do it. And it's an effective way to follow the markets. And when you start to get a context, and I try to keep my context as best I can. And I'm trying to also figure out I need stop going to bed at 2 a.m. in the morning. I need to get to bed earlier. So I'm trying to figure out a way to get these videos out there a little bit earlier and what have you. All right. Yeah, Dow futures look like they bounced a little bit. We got a little bit of stability. Look at the Nasdaq. That thing just won't go down. I mean, look at the Nas futures here. You know, but I tell you, we should take a look at the Nasdaq futures. This market is just at a different level. But I'm gonna compare this and say it's just like the Tesla chart. Yeah, we printed an all-time new high. So what? You want to buy it there? You know, that's the question I always ask. Hey, that's great. If you didn't own it lower, would you buy it at an all-time high? And answer is probably not. Yeah, and thanks for somebody reminding the quadruple witching is tomorrow, which is expiration of futures options, everything tomorrow. So that's also what we're likely to see. We're going to see a lot of sell-off as we come into Thursday and into the settlement on Friday. And I can tell you, having been an option market maker, these are in the old days, the old school days. This was the best time ever. This was money time at the end of expiration month end. Being short just about everything. And market makers of old, you would have a hard time convincing any market maker ever to own outright premium. There's always even a ratio sell or 1-to-1, 2-to-1, 3-to-1, where you're selling versus the long side. And you might even throw some stock in the middle. So you're doing butterflies and condors. You're never, ever, ever buying options. We used to always say buying options was a sucker's game. There's some good money. We didn't have the volatility levels that we have today. So you can definitely trade the options. And one of the things that you can also do, like on a trade station I have on the screen here, and I get these models out there on TradeStation, you're going to be able to take, this was something that we did many years ago. We used to apply this logic to the options contract to trade. And there's primarily locating the entry points and, looking, there's a lot of strategies. I am trying to get a very old buddy of mine. I'm not going to mention his name. He's well known. I would just tell you he's one of the original founders of TOS. And I'm trying to get him to come in. He is an option genius. And, Tom Snoznoff was actually one of my very first customers for the business. So I ran into Tom in Vegas last year. I haven't talked to him in 20 some years. So I have not, but the point is that I've got some really cool stuff that I want to start maybe bringing into the channel, trying to figure this out. Yeah, so the close today, folks, is going to be key. We only got a half hour to go. I guess we're just going to hang out, if that's okay with you guys. Just the way this morning got messed up, we're just going to have to hang out. So I think last week I did a 2-hour live stream, and the best I can tell, we still have I've got 2 streams going simultaneously, and looks like 1,000 live people there. So once again, if you haven't smashed the like button, hit it. Let's hit it. Let's go. Okay. I'm just trying to find. I'm not getting a lot of stock ideas from you guys. Give me some ideas. Yeah, I see somebody pointed out. I see a blue buy signal on the NAS today. Yeah, I see that too. That's an interesting signal. You can see sometimes those things will last for a couple of days and go out. I would be somewhat hesitant on this signal. Not every signal works, especially on some of these shorter term stuff. We go over here and maybe go to an hourly graph on the Nasdaq. You can see this is exactly what I'm talking about. When you start to get in these noisy areas, this could be what's happening on Nasdaq, where we get a buy day or tomorrow we get a sell, and it just kind of whipsaws around up there. But you can see here on a 60-minute graph, it had a nice trade over here, got out pretty good, and then this noise. You get into these noisy areas, and the Nasdaq is actually starting to get into that noisy area. Okay, man, you guys are doing it now. Thank you. Let's do AMD. Let me get back on a daily graph. So AMD has been flat for weeks now. 200-day moving average climbing up here. Nothing there. PPMs are positive. PPM1 is positive. A little bit of trend, some support here as far as the market grid goes for today. Market grid 5582, 5585 R2, so it did hit that low 5430, so S1 R2. Only inverse, it hit R2 first, and then it's traded down toward the S1 number. As far as any trends, trendless. Short-term trend, there is some support, 0.36 ppm1, not a lot there. Let's see if there's any weekly trends here to look at. Same kind of thing. I remember talking about this over the last couple of weeks, where when you see the bends come in like this, it's basically throttled this thing in a range. There's really not much there. And I'm gonna go back to some of these stock ideas, but I did want to bring up, just looking at this chart just reminded me of gold. I mean, the metals are just dead. There just doesn't seem to be any reason to do anything. We're looking at 2 months now in this range. Same kind of thing, and I want to bring this up because of how it looks. And okay, Jay's telling me to check Skype. Yep, I just hit gold. We'll do RTX. This is weekly RTX. Raytheon. This chart probably reminds me more of the S&P. We're trading under the 200-week moving average, and this is going to be major resistance here. PPMs almost look exactly like the weekly S&P. You've got really strong underlying momentum on the 10-week moving average, is where we traded today, 63.10, low 62.44, last trade 67.04. So we bounced off support. Chances are the volatility has expanded quite a bit. That's why you see the market grid spread out like this. And typically when that happens, there's more, there tends to be downside when those expansion happens. So 63.10 is going to be the level you're going to watch there. So if you're long that thing, be careful around there. Let's take a look at a daily chart here. Same thing, looking at, sideways. High 68.20, R1 68.77, low 66.89, 66.87 was S1. So we have just about a pretty narrow range, S1, R1 on that. Trend-wise, we're seeing PPM starting to fade. This is what I was basically saying on the weekly chart, is that this thing was starting to fade a little bit. So, and all right, there was a bunch of them here. Didn't do silver. Let's grab silver real quick. It looks the same way. Just this ugly sideways range, trading just above the 200-day moving average, kind of hovering along that. Go to weekly, maybe there's something there. Not much. These are all of these markets. 200-week moving averages were just moved just above it a little bit. This has been kind of the pivot point. We get above it, we don't stay above it, we drop back below it, and this is just there's no trends here to speak of. Although the short term, we're looking at 0.88 on PPM1, and today's low was 1705. 1675 is the 10 period moving average. So that's that's your support right there with a 0.88. So you can buy against that number. It should hold on a weekly basis. If you get close to, there's probably a trade off of there, but we're going to be range bound, and this weekly is probably going to be, we'll call it S2, which is the 84 number, which is close to that 10 period moving average, S2 to R2. All right, so let's do NVIDIA. Weekly trend, let's go to daily real quick first. Yeah, a lot of these markets are beginning to stall here, and I see INX just took out 3110, so SPX just took out 10. That's the number I wanted to see. Yeah, it's bouncing around there, but a close down here, we're what, 15 minutes from the close. This is looking pretty good. I like this. This is going to give us a confirmation of the commentary I did last night on the S&P. We'll see how this thing closes up if we get some more weakness. I'm not sure why anybody would want to own the thing right now, to be honest with you. There's no real news coming out. I guess tomorrow we've got employment claims again, unemployment claim. I don't know. Is anyone caring anymore? All this stuff is starting to get somewhat boring, I guess. Markets are starting to act really tired, and I think they're going to give us our 3 days, maybe 5-day decline here. Okay. So I'm trying to get a second wind here, guys. Yeah, I guess, do I mean it's going down? Yeah, we should be going down. And I think, Gary, if your screen's blurry, you might want to check your res. It's going out at 1080p, so you might want to make sure you're on 1080p. Yeah, so let's talk about the let's talk about the downward target on the S&P while we're here. Let's go back to that because I think that's as we come into close, we'll focus on that for a minute. I'm going to put on some Fibonacci. I had these on last night on the commentary. So we're going to put a fib ratio. These are really hard to see. I'm going to do my best. Matter of fact, I'm going to bring up this magnifying window. It seems to work pretty good. So in this window, it's hard to see, but you'll see some dots here. Let me do one more thing. Let's put the data window up as well. So if you look in that middle window there, you'll see the bars, you'll see the market grid, but you'll also see, you're going to see the targets here, which are 30.44. So somebody's talking about the downside target for the next couple of days. 30.44, we're getting a little bounce off of that. We printed 8s. We bounced all the way back to 14 here. I'd really like to see this thing go out under 31.10, but I'm okay with this. As I said in last night's commentary, I'm okay if we go out at the low end of the range because we've established a pretty significant area on the S&P between that 51 that we printed yesterday, today's 41. You're starting to see there's sellers up there. Nobody's looking to buy this thing, and it hung around for a while trying to do that, even while Mr. Manipulator himself was talking. Paul's talking, he couldn't even find the juice to get it to go. So once again, I just want to say, I know I've got two streams running. One stream I can see questions, the other stream I cannot see them. So I apologize for that. We had a glitch at the beginning of the meeting, and I know we've got close to 1,000 people watching, but half of you I can't see if you're asking anything. I really apologize. But yeah, as we come into this pattern, so the downside target, 30.44 men. Now, I talked about a number a few minutes ago on the S&P, which was the 30.61 level. That's personal to me. That's the trade on the SPY. So we bought on the 5th of May, I believe it was, at 28.44. We went long. That was the second trade. We actually went long on the S&P 3 days after the low, rode it up into the 29 handle. Market goes sideways. We entered that trade at 28.44, and now we're still long in that. So this is a 200 point trade. Maybe it'll hang in there, and that's the key to using these models, is being patient enough to wait for the sell signal, not to anticipate it. And sometimes anticipation is good. I would tell you a lot as we go forward in this channel and the community, that when you see certain things and they just give you all kinds of money, you got to take it. And what you do is, I always tell everybody, trade in increments of something more than one. Try to trade in 2 of something at least. And when you see those big surges, you just take half of them off. You sell half. You just sell it. You don't worry about where it's going. You just sell it. What you want, always, every goal in every trade is to eliminate risk. And if you trade in multiples, you always want to be scaling out. If you're looking for a bigger trade and they give you this big burst out of the box, and you can do that and sell half, and then your stop loss or your risk point, you can cover that. So even if you get stopped out now, you break even. You always want to work to get break even when you're a trader. Always. That's goal number 1, eliminate risk. Goal number 2 is make profit. And this is just like good, solid, and sometimes you might make so much on one of those surges, you don't have to sell half. You can sell a third and cover it. And you're moving your stops up, you're following things, and everything that's happening, like on the WaveTech tool, everything I'm doing, the stops, the exit point is always moving. Just like I talked about, it was 30.28 last Friday, now it's 30.61. It's probably going to be 30.71 tomorrow, and so forth. These numbers move up, and it's a trailing stop. I'm not big on intraday stops because they tend to be random. I like to see the closing. I developed everything that I do happens on a closing basis. So yeah, I guess we'll get to watch it close together today, and I'm just running out of steam. I've been going for a while, and I'm running on low battery, so I need to recharge. But let me go back and look at some. Let me close out this magnifying window. But so targets 30.44 min, 29.73, 29.28 would be the extreme targets. That would put us down below these lows that we printed the other day. 30.66 was a 29.65. I guess that would be a retest of the lows of a couple of days ago, and that would be minimum. It's very likely. Let me draw something in here while we're doing this. The the minimum for this is the pattern here. I'm going to draw it in. This is the right shoulder. The minimum would be, what I'm talking about here is to come down and retest these lows. There is a potential for it to go down below this level. Are we going to go to 2600, 2690? I talked about earlier, 200 week moving average. That's possible. I think once this thing gets going, and Powell's not talking, like I said earlier in the show, we've been listening to this guy for 2 weeks. So finally he's done. We've been listening. I couldn't even stand listening to these idiots in Congress asking these stupid questions. You know, you want to you want to know why? When I was talking earlier about, I think it was around 45 minutes when I was going through the very long-term scenario and talking about the realities of where we are right now. If you go back to that, all you got to do is watch Congress for about 15 minutes and you realize we're screwed, right? Let's face it. There's a bunch of idiots running this place. If this was a company, you'd fire every damn one of them. I don't give a shit what aisle they're on. I'm sorry. It's crazy. Yeah. I would say the system's broken in a lot of ways. I don't know what fixes it, what comes out of everything we're in right now, but it's definitely been revealed, right, folks? So, but the potential here could be that this is the beginning of something much larger. And getting into the weekly charts, looking at the things that are likely to happen here, that's very possible that a move to I'll put it up here, the move to this 200-week moving average is very possible. Here it is here. I'm going to take the market grid off for a second. I think it puts a little cleaner picture. What we do have going for this thing is that 10-week moving average, 29.36. So a move down, when I was talking about the objectives, 30.44, this 29.36, 39.26, that's going to be pretty much the extremes of what we're going. That's probably initial move, and what we're likely to get out of this 5-day pattern. After that, we're going to be able to evaluate. Now, you can go in and make a lot of predictions. This is something that is interesting. When you start talking about long-term projections, most of them, there are sometimes a patterns set up really well that you can make a projection. But if you're a trader and you're an investor, who gives a shit what's going to happen 2 years from now? Okay? It doesn't matter. What matters is what's going to happen 2 days from now, 5 days from now, 5 weeks, 3 months, maybe a little longer picture. The longer term the projection, the more likely it's to be wrong. That's why long-term projections for global warming and COVID and all that stuff is bullshit, because the models are just that. They're models, and they're predicting the future, which you can't do. And the longer you look out, the more likely you're going to be completely wrong. Not a little wrong, but completely wrong. And that's why all the analysis that I do is based on incremental viewpoints, looking at daily, weekly, monthly, piecing those bars together day by day, week by week, and month by month is going to be a much better way to approach the markets. This is how I've been doing it for like 30 years, folks. And it just keeps you in focus. Trying to worry about 2 years from now, really? I don't care. I'm a trader. I'm looking at what I'm trying to achieve right now, and what does it mean? What do the markets mean to me right now? And that's what we're always doing. Yeah, and I see Mark says the Fed could still buy stocks. Sure, they could. They've made it clear they can buy anything they want. Remember the term that they used? Actually, it's so good. It's so good. I had to write it down. I got these 3 words that Powell said: forcefully, proactively, and aggressively. And I'm not sure that they've done any of that at a high level. What they've done is they've convinced people that's what's going on. I'm going to pop this thing, the chart, so we can watch this close as we're coming in here. 3 minutes. I want to watch the futures trade here. We're 3104. The low's 3094. I don't think we're going to get to that. I just want to put this screen up while I'm talking here. We're like 3 minutes out from the close. But I'm not sure that these guys have done anything they said they're going to do other than talk. There's some evidence that they've been buying treasuries and all that, and they've talked about they bought corporate ETFs one day. I don't know how much they bought them. Well, all they have to know, listen, this is those who've been following the channel know I am not a Warren Buffett fan. I call it the Buffett trade. When you know the government is buying something, why not buy them? I told a lot of folks early on when this crisis stopped, when the Fed announced they were going to buy the MBSs, the mortgage-backed securities, if you look at the ETFs that were tracking the mortgage-backed securities, they were collapsing. They went from collapsing to all-time new highs, and now they've flatlined because there's nowhere to go. So everybody bought back because, hey, you got the Fed behind you. That's one trade that you had to go, the Fed's got your back. But a lot of times, all they have to do is say it. Everybody else is trying to get in front of them. And when that happens, the trade works. And they don't have to buy anything, and the market's stabilized. That's always their goal. That's why I was saying earlier, they want to do exactly that. They want to convince you and me that it's okay, they got our back, and everybody piles in so they don't have to use vast amount of capital. Now, in the case of shutting down the economy, they did spend trillions of dollars. There's no doubt they bought stuff. But this crap that they put out the other day that they're going to buy when the market is down low, and we're going to buy corporate bonds, and the stock market, reverses 1,000 points or whatever it was on the Dow Jones. That just doesn't make sense. They're buying corporate bonds. Anyway, I think this is all jawboning. I think it's posturing. And sooner or later, market participants become very aware and they stop buying into the BS and they start to make decisions back to the old world of looking at fundamentals. And like I said, I've been saying the last 2 weeks, the fundamentals, the reports are coming in, keep coming in better than expected because no one has any way to measure what's going on out there. So all the economists are going, okay, retail sales are going to be up 9%. No, they were up 17. There's no way to estimate this stuff. It's all a guesstimate. So we've closed out here, went out at 04. Not a lot of activity here. Usually there's a lot of activity right here. There's here you can see, watch the futures trading. They're selling them off a little bit. We're just trading twos, ones. And one of those events I was talking about a few minutes ago, when these markets start to collapse like this, you'll see how the bids get hammered and then the offers follow them very, very tightly. So we traded down to 01. We're back to 03, probably stabilize here. This is probably going to get pretty boring. If we go back and look at the S&P, we closed at 13. I would have loved a 10 or under close, but I'll take this one. Let's take a look at the daily. Yeah, so very, very narrow range today compared to what we've been getting. And we stayed under the 10-period moving average. PPM1 has actually turned down a little bit. PPM2 is turning down, still at a 0.25. So that magic number that I was talking about, let's just figure out what the rate of change is here. And so it's rising right now at about 8 handles a day. So tomorrow that number is going to be 3076. So we closed at 3113. We're going to have to stay over 3036 to keep the models long. And and that's pretty much it. Somebody asked what trading interface is. TradeStation. Yeah, I'm just looking at some comments here, and I'm gonna close down. We did roughly 2 hours and 9 minutes long live cast. A lot of folks engaged on 2 live streams simultaneously, which is an interesting concept. We've got probably about 1,000 live on the two streams. So I appreciate everybody watching. If you enjoyed this show today, this session, pound that like sign before you leave. And we can, as I did last week when we saw the markets collapsing last Friday, I'll light up the screens if things get really crazy. So we'll keep you informed on anything and everything. And we'll just go forward. I really appreciate everybody taking the time out to hang out for this couple hours. I think we got through a lot. I didn't hit as many stocks we have. Kind of got off on a rough start with this crash by TradeStation. So that's about it. Yeah. So Kelvin, awesome, man. 4 a.m. in Singapore, up watching me. I appreciate that, man, a lot. I mean that. Kelvin, you're living my life, man. I went to bed at 3 last night, so that's the way it goes. It's all good. It's all good. That's funny. Somebody said one dislike for me. Warren Buffett actually gave me a thumbs down. Yeah, Yeah, we really appreciate it, man. This is a great community. We're growing. It feels like we're going really fast. Tell your friends, and we'll hopefully not have a glitch starting a meeting. I think we would have probably had a couple thousand if we didn't split the screen here. Anyway, thanks again for watching, everyone. Hey, Phil, I see you. GLD, I covered gold. I don't think GLD looks any different. I'll do this just letting a bunch of folks, it's the same pattern, it's just sideways. The PPMs are starting to turn up, and this is a daily GLD. Weekly, that's kind of interesting that GLD is looking like potential 167, 173 right now on a weekly. I like gold overall. It's just been in this stuck in this flat, and we never got to the U.S. dollar, so I apologize. I will definitely cover that tonight in the video. I'm making a note to myself right now. I have sticky notes all over my computer. Yeah, so I see some final questions here, and I've been wanting to cover these things. Is crude oil, U.S. dollar. There's some other stuff that's out there. Yeah, this thing's going to be there's going to be two broadcasts, folks, when this thing finishes. So I'm going to shut them down here, and really appreciate once again everything. We had a super chatter. Appreciate that, the support of the channel always. So thanks again for everything. Um, I my French is terrible, but you're welcome. Uh, uh, Yeah, it's going to be the next few days are going to be very interesting. This is a very pivotal point in the charts and in the markets and potentially in the economy from the standpoint, because I think as we go on, it's going to get more interesting. All right, guys, I'm shutting her down. We'll talk to you tonight on the usual commentary. Thanks again.